All right, we still have a few folks trickling in, but we are streaming live on YouTube. We will also be recording this webinar and sending you a copy of the recording along with the slide deck after the session today. You'll also get a copy of the questions and the answers that we discuss on the call. Thanks again, everyone, for joining us. This is the CDLE Compliance Quarterly Live Webinar. I'm Jessica Smith, the Public Information Officer here at CDLE. A few housekeeping items before we get started. The chat function on Zoom is disabled. However, our panelists here will be able to chat you and the entire group. If you have questions, please use the Q&A function on Zoom. We will get to as many questions as we can. And again, this will all be shared out with you later today and published on our website. So with that, I will go ahead and get started. A quick look at our agenda. We have leaders here from all of our regulatory division, and we are going to start with family. So I'm going to hand it over to David Gallivan. David.
All right, thank you. So the family program is our newest division here at CDLE. It was approved by voters in 2020. We began collecting premiums in 2023, and we paid our first benefits January 1st, 2024. It's somewhat amazing to me, sitting here thinking that we are just about a month and a half away from the second anniversary of paying benefits. I don't know where all that time went, but we've been here, providing up to 12 weeks of paid leave to Colorado workers to take care of themselves and their loved ones. This is available for individuals who are managing their own serious health conditions, for bonding with a new family member through birth, adoption, or foster placement, or helping a family member with a serious health condition. There's a couple other forms of leave there too, but we've seen very, very few of those. Uh, we do offer 12 weeks of paid leave. It can go up to an additional 4 weeks for individuals who've experienced a pregnancy or childbirth complication. And there's going to be another extension coming January that we'll talk about here in a moment. So here's everything you need to know for this quarter. Self-employed individuals, please remember to upload your tax transcripts and W-2s from the prior year by December 1st. This is how we ensure that we've got the right numbers if we need to calculate benefits for you. And if you don't upload that information, we might lock down your account and you'd be ineligible to receive benefits. And well, that's why you're paying us premiums. So help us get that information in, make sure that you're getting the benefits you deserve. The big news this quarter comes actually external. This is not a decision that we made, but the Internal Revenue Service has given us guidance that medical leave benefits are considered third-party sick pay, and that makes them taxable as wages. So that means if employers with more than 10 employees, so those people who are paying an employer portion of the premium, you'll have to pay taxes on the portion of benefits attributable to that premium share. So that's one half of the benefits because employers pay one half of the premium. Uh, that's subject to FICA and FUTA withholding. So you need to remit those taxes to the IRS, even though we're the ones paying those benefits. So that's a complication. How do you know what we're paying? Well, we're going to tell you. We're going to send out CSV files directly into your My Family Plus Employers account. We're going to list the claimant, the taxable amount, and details of those withholdings twice weekly. If you have questions, I encourage you to ask anybody but me. I'm kidding. You can ask me. I will refer those questions to the appropriate experts. But we do answer those a lot in our September and October editions of our employer newsletter. And go ahead and subscribe to our future newsletter. We put a lot of updates out there. Uh, some good news for employers. Starting January 1st, employers and everybody actually, the premiums are reducing. Our premiums are going to drop down to 0.88%, and those premiums will be in place throughout 2026, will be adjusted at the beginning of 2027. So our portal is going to automatically calculate the appropriate premiums based on your wage filings. Before submitting your report, the portal is also going to automatically check your wage report data for formatting and compliance errors. So what we're doing is trying to help catch and correct those issues before they trigger something on our compliance side. And then the biggest change coming to family. As of January 1st, 2026, we will have available up to 12 additional weeks for parents with a newborn in the neonatal intensive care, or a newborn who is admitted to a neonatal intensive care unit and then transferred to a higher level of care. This is a separate 12-week bank. So this is in addition to the 12 weeks already provided by family. If you're covered under a private plan, we're working with the carriers now to make sure that everything's appropriately updated. All of our carriers have been doing a great job of staying on top of this. If you're self-insured, we're going to send out some information, but you don't need to update your application or information with us. And for those of you who are covered underneath the state program, first, we appreciate that. And second, this will just automatically be a part of the benefits available coming January 1st. Uh, so, a couple of other things to know about the uh, rulemaking. We've updated all 9 of our family rules. These were adopted at the end of October. They're pending official publication. They'll be effective January 1st. Most of those are minor technical adjustments, but a couple of biggies to pay attention to. First, that neonatal care leave. We've adopted new rules that explain how that's going to work. That's going to be in Rule 3 or 1107-3. That's titled Benefits and Employer Participation. That's also where you're going to find rules relating to the new tax withholding. There's also going to be some information in Rule 1, 1107-1. Uh, so go take a look at those. We do have some information on our website about that. And on the technical side, on November 24th, our premiums portal is going to start sending out the third-party sick pay documents reported by the IRS rules. So that should be plenty of time for you to begin receiving those reports prior to the first week of January when those rules go into effect. And so moving on to the next slide, we do have several resources and toolkits to help you through all of your employer obligations. File specifications and file templates for the wage reporting. That's very important. Again, errors there will trigger a compliance review. User guides, how-to videos, various tools for how to communicate with staff. This is critical. It's part of the legal obligation of employers to let your employees know that they may be eligible for family. It's also to your benefit. It's one of the key ways that you can address leave stacking, is letting your employees know that family exists, that there is paid leave that they're eligible for, and encouraging them to take it. Uh, Newly adopted rules and supplemental guidance. That's all on our rules and guidance page. But the absolute best way to stay up to date each month on family is to subscribe to our family business newsletter. We do keep that current. We send out updates on everything that's going on. So we'll keep you updated if you give us your email address, and we try to be good with that. We don't sell it to anybody else, so you only hear from us. With that, I'm going to hand it over to the Director of Unemployment Insurance, Phil Spessart.
All right, thank you, David, and thank you all for joining us this morning. My name is Philip Spessart. I'm the Unemployment Insurance Division Director. As David's noted, they've been around for about 2 years paying benefits. So they've been around a little bit longer than that, but not much. You're going to hear from a few others of us today that are much older kids on the block. The unemployment insurance program is a federal/state program, so differs a little bit related to the family program. And the federal program has been around now for 90 years. So the Division of Unemployment Insurance, we help people who've lost their jobs through no fault of their own by providing a temporary wage replacement to them. And these unemployment benefits are funded by employers and help workers pay their bills during job transitions and contribute to the economic stability of the state. As employers, online, you'll realize that you actually pay 2 versions of premium/taxes. You pay the Federal Unemployment Tax Act. Those monies go to the federal government. They come back to us. A small portion of those come back to us to handle our administrative costs as we administer the program. The State Unemployment Tax Act funds that you pay are the funds that sit in the trust fund and pay unemployment insurance benefits. And with that, I'm going to hand everything off over to Megan Culp, who is our Employment Services Branch Manager.
Good morning, and thank you, Phil. Thank you all for joining us today. There's a lot going on in the Division of Unemployment Insurance during this time of year, so do have a couple updates for you. Notable for unemployment for this time of year is the 2026 employer premium rates are now going out. They are all available in the MyUI Employer Plus system. You may not have received them in the mail yet. If you're an employer who has a business friend next door who's received their rate and you haven't, please know that those are going to be mailing out through probably next week. So if you have not received a physical paper copy yet, hang tight. Those typically mail by December 1st of every year. Also important to note with all of our support rates and solvency surcharge rates, we do ask that you are rounding each of those individual rate components to the nearest cent using those generally accepted accounting principles. So really just a round up from five sort of situation if you are getting fractions of pennies in your computation so that we can get you the most accurate amount owed each quarter. All of those rate components are going to be listed in the MyUI Employer Plus system, and they will also be present on your rate notice. Um, with the rate notices going out, typically we have a 20-day protest window that is based on the mail date of your form. Because all of the protests are received by mail, I'm sorry, no longer received by mail. I want to highlight that. No longer received by mail. They are only received electronically. We do have just an electronic expiration date of December 15th. So even if you receive your rate notice 30 days in advance of that December 15th date is going to be the hard deadline. Legislatively mandated rates, so those are going to be our support rates, the solvency surcharge, those cannot be protested. What you can protest is typically going to be the components that go into your rate computation. So we're talking about missed quarterly reporting that should be there but isn't showing up for some reason when you look at your records. Benefit charges that you appealed and won and are still showing up, for example. Every now and then we do have things sneak through depending on dates. So the rate itself, if you don't like it, but you don't necessarily have a concern with the things that went into the rate, typically we are not really seeing protests that are appealable or you can turn over that rate for those reasons, just to kind of have that in mind when you're looking at the data. For the 2026 voluntary premium payments, these are the payments that you can make as an employer that can contribute to buying down your unemployment insurance rate. So it's important to note that these are not eligible to be refunded. They also are not something that you can submit if you owe any balances on your account. And so take a look at your account, make sure that you're eligible. The system will help guide you through that. And VPPs must be submitted online by Monday, March 16th. Typically, the due date is the 14th of every year, but because the 14th lands on a weekend, we did extend that deadline this year. And then, of course, a reminder, no more paper checks will be accepted. Please use the electronic process online. A friendly reminder on our out-of-state wage credit processing. Effective last quarter, we have updated our process to only review out-of-state wage credits that go back a maximum of 6 quarters. So the adjusted wages need to be reported to Colorado within that 6 quarter period of time. And we are currently reviewing wage credit requests submitted as of Q1 25, so about 3 quarters behind here. And I would say based on the time period, not necessarily processing time. And then, of course, we are validating those wages within the Interstate Connection Network ICON system. So make sure that if you are a larger employer with employees that live in multiple states that move in and out of states, that you have wages appropriately reported to each of those states. And then for our tech updates, I mentioned this slightly earlier that the employer rate notice will now be displayed within the MyUI Employer Plus system with the component rates broken out. So this includes our amended rate notices. These are going to be the individual rates that make up what we're calling your support rate. It's going to be the individual rate for your solvency surcharge, your base rate, and all of these are going to be extended out, I believe, to the 6th decimal place to help you with those rounding computations that we talked about as well. We did receive some advanced employer questions, which I'll here for help with perhaps coming through with this time of year. Question from an employer is when filing quarterly unemployment wage reports and using the previous quarter report for names in SSN, how are those names arranged and can they be organized alphabetically? At this time, when we do copy from a prior quarter, they are currently sorted numerically by the SSN, which of course, is perhaps not the most intuitive. So we are exploring options to expand data sorting functionality. There won't be a change to that until we are able to prioritize a change with the system vendor. So I would expect more information on that probably at our next quarterly webinar, but as of right now, it is numerical. And then, is there a way to give employers more than 48 hours to answer claims? It's important to note by law, employers do have a full 7 days to respond to the division's initial request. I think initial there is really important to note. If we don't receive a response or if the agents that are supporting your claims processing have additional questions, any follow-up phone calls or emails or requests made via the MyUI Plus system will have that 48-hour deadline. And that is a hard deadline to observe due process for both parties or all interested parties, rather. And so if you have additional feedback or concerns, please visit the Responding to UI Claims page for more information there. And then last for us is just a reminder of several helpful resources on our website, engagement opportunities such as this meeting that you're attending today. We also have a free UI employer workshop upcoming on December 17th. And then rates, information, and resources here will be linked for you in the chat function on the Zoom. Toolkits and resources, and then monthly employer updates where you can also sign up to receive monthly emails. And as a note there, third-party administrators are more than welcome to join. It's specified as employer, but there's really great information there. So that's it for unemployment insurance. Thank you again for being here, and I am going to hand it off to Division of Workers' Comp with Amy Kingston.
Thank you, Megan. So the role of the Division of Workers' Compensation is a little different from family and UI in that we are an administrative conservator or regulator of the system. In other words, our job is to make sure the system runs correctly. And that means that we have a lot of units that do a lot of different things. For example, we have auditors that audit insurance companies. We have a compliance unit that makes sure that employers have the coverage that they need. We also have a great customer service unit that helps injured workers when they need answers to questions. We have 5 main external stakeholders: injured workers, employers, insurance companies, attorneys, and medical providers. But unlike UI and in family, we do not pay any benefits. We oversee the system. We do not pay those benefits. But we do facilitate a process that resolves any disagreements between carriers and injured workers. We do have some upcoming rules and regulations that I'd like to talk about. Every year, we have a new medical fee schedule that goes live on January 1st, 2026. There is one important regulation that is being changed this year that I want to make sure that people are aware of, and that is all providers, or all medical providers who are submitting 25 or more workers' compensation bills per month are now required to submit them electronically. That means that also not only that the payers have to submit these electronically, but anyone who will be paying these bills. So insurance carriers, even if you're a self-insured employer, must accept these electronic bills starting January 1st. If you have any questions, you can definitely reach out to the division. We also hosted a webinar to prepare for these changes. The link is in these slides. It's also on our website if you would like to watch that webinar. It's very informative. Also, we have a very large change, but it isn't happening for quite a long time. House Bill 25-1300, which is known as the Workers' Compensation Benefits Proof of Entitlement, but better known probably as the Physician Choice Bill, will go into effect on January 1st, 2028. So 3 years from now. But It is a significant legislation that will affect nearly all employers in Colorado. So currently, how the system works is that if an employee is injured, they will report their injury to their employer, and they will be provided a list of 4 physicians in order to seek treatment. This bill changes that, and instead of getting a list of 4 physicians, the injured worker will now be provided a list that is on the division's website that will have every accredited physician in the state of Colorado to choose from. The injured worker will have to choose a doctor within a geographical limitation to choose as their doctor. So going from 4 to basically any doctor within Colorado. Um, and so this very big change means that we're going to have quite a lot of implementation in the next few years, getting that directory up and running, but also coming up with new laws and regulations on how that's going to be implemented. To that end, we have just wrapped up our listening sessions, which were very successful to hear from you how this new law should be implemented. And if you missed those, that's okay. We're still accepting feedback on how this new law should be implemented. The email is on this slide, but you're also able to, I think, listen to those listening sessions on our division website. And so we will also be going through rulemaking in the next couple of years, and we're accepting feedback during that process as well. I don't want to get anyone worried. We do have many, many years. Like I said, this doesn't get implemented until January 1st, 2028. And until that time, our system will continue to work as it currently does. So if someone gets injured, an employer provides a list of 4 designated providers. As for a tech update, the Division of Work Comp is going through modernization of our tech program. Our new system is called CoComp, and it aims to create an easy to use, transparent, and efficient system. It's going to be released in 2 phases. The first phase is going to be summer of 2026. This phase is primarily aimed at insurance carriers. They will be able to submit all of their documents to the division electronically. So that is very exciting. And then in 2027, summer of 2027, we will be opening up our system to everyone. So now injured workers, attorneys, employers will be able to come onto our system and see the status of their workers' compensation claim and submit all of their forms electronically. So if you have any questions or would like to give us feedback on how you think that system should work, please let us know. Once again, email is on this slide. Last, oh, not quite last, but we do have some resources. I do want to highlight the division's premium cost containment program. This is a free program that we offer for employers to lower their premium cost. What it is a program for employers to create a safety program. Once they create that safety program, and it is approved by our division, they can receive up to 10% off of their workers' compensation premiums. We are very interested in preventing injuries because after all, the cheapest injury is one that never happens. So if you're an employer and you're interested in creating a safety program, or if you already have a safety program, please reach out to us so you can get that discount for your workers' compensation premiums. I did want to talk about some other engagement opportunities. Every month we have, on the 3rd Thursday of the month, we have a presentation brought from our Division of Work Comp judges that discuss real life cases that have just happened in the last month. Those are free, and if anyone is interested, they have continuing legal education credits. Also, in March of 2026, we have our education conference. This is a conference that we put on every other year in Colorado Springs at the Broadmoor. This year, it will be from March 9th to 11th. This year's theme is the next frontier in innovating our future. And we will have a variety of presentations and guest speakers, and I highly recommend you come and enjoy this year's conference. And I believe that's it from me. And I will turn it over to Mahesh Albuquerque with the Division of Oil and Public Safety.
Thank you, Amy. My name is Mahesh Albuquerque. I'm the Director of the Division of Oil and Public Safety, also known as OPS. We also like to say OPS stands for Outstanding Public Service, which we strive to provide. Division of Oil and Public Safety is a small regulatory program within CDLE, and we have a variety of programs, diverse programs that are all focused on either environmental protection or consumer protection and public safety. Some of our programs include the regulation of amusement rides and devices, carnivals, zip lines, all those sorts of fun things. The use of high explosives in Colorado, not fireworks, but anything that would be considered a high explosive as used in construction, demolition, avalanche control, and various other uses. We also regulate boilers and pressure vessels. So these are usually steam-fired boilers in buildings anywhere from small ones at a dry cleaners to big boilers in hospitals and commercial buildings and even at refineries and energy plants. Um, we also regulate elevators and escalators. We call that our conveyance program, which includes um, even the train between concourses at DIA. And then in our petroleum programs, we regulate everything related to refined petroleum products, everything from the manufacture of gasoline and diesel and other fuel products like LPG, CNG, LNG, and even hydrogen, to the storage of those products in containers or storage tanks. And then when those products are released to the atmosphere or to the environment, we oversee the cleanup of petroleum releases, and we have a petroleum storage tank fund that actually acts as an insurance mechanism to enable owner operators to get their sites cleaned up. And lastly, we have it's our newest program, the Underground Damage Prevention Safety Commission, which has enforcement oversight over Colorado 811, the Call Before You Dig program. So that's an overview of oil and public safety. I'll go on to some things that are more relevant to this year. And as you may imagine, with a regulatory program, we are constantly working on regulations and updating and making sure our regulations are not only current, but they meet the needs and are effective in helping promote public safety in Colorado here. So this year, some of the things I want to kind of bring to your attention. The first one has to do with amusement rides and devices program. A couple of years ago, we got authority to change and actually increase our fees so we could get some additional staffing to provide additional oversight and ensure safety. And so in our regulations that we adopted a couple of years ago, we had a schedule of fee increases that first started in 24, 25, uh, will will continue in 26 and end in 27. And so there's a fee change on the permit fees for amusement ride owner operators that takes effect in January of 26. And it's listed here as well as in our regulations on our website and on the actual registration application form. So just want to make note of that. The other thing that we've been pretty active this year on has been changes to our boiler and conveyance program regulations. So we've had a number of stakeholder meetings earlier this year. I hope some of y'all who have these devices were able to participate in those meetings. They were pretty well attended, and we actually just a few weeks ago finally adopted rules in both those programs, or revised rules that'll take effect in January of 26. And you can go to our website. There's a link here that has the rules that'll take effect then, and more information on those rules there. Moving on to our next slide, we have a variety of resources and toolkits. Throughout the year, our staff, there's a lot of training. We call them Keys to Compliance. We had a big Keys to Compliance event this year in Denver as well as Grand Junction. But throughout the year, uh, our staff welcome the opportunity to actually visit an owner-operator and conduct training on our requirements, our regulations at their facilities. So if you're interested in that, uh, feel free to reach out and we can kind of do like a mini keys to compliance, what's new within our program. We publish quarterly bulletins and newsletters through our program. And if you go to our website, for each of our programs, you can find the archives of those newsletters and bulletins. One of the things I would say, when you go to our website, we have a contact us button. And one of the things that we pride ourselves on doing is we actually list all of our staff that you may need to contact with their names and their telephone numbers so you can contact them directly. We encourage you reaching out to us and really offer this thing where in any of our programs, if you want to have questions about what you need to be doing, you can request a visit, just a site visit without a full inspection, but our inspectors will make time to visit your facility and kind of walk your people through what's the expectation from us, so that when we do come out and do an inspection, there's no surprises, and it gives you a better opportunity to be in compliance, which we think ties directly to promoting safety. On the petroleum side, we have a interactive petroleum guidance document that supports owner operators and consultants, and that is also on our website. So I think that is all that I have for this meeting here. I'm going to hand it over to my colleague at the Division of Labor Standards and Statistics. Thanks.
Thanks, Mahesh. Hello, everybody. My name is Eric Huey. I am a manager in the Division of Labor Standards and Statistics. I wasn't going to say this, but since Phil brought it up, the Division on Labor Standards, or some version of it, with regard to labor law enforcement and labor relations duties, there's been some sort of unit that's done that for over 100 years. I haven't been there that whole time, but probably a big chunk. But mainly what the Division of Labor Standards does is enforce public guidance and offer compliance assistance regarding labor laws, especially those laws related to wages and hours. Even though we've expanded our authority over the last few years, the bulk of what we do is provide guidance to employers and employees to make sure that employees are paid the wages they're owed under Colorado law. We do enforce that. We take complaints. We issue public guidance, which we'll get to in a little bit, and we do offer compliance assistance to employers if they do have questions. It can be formalized. It can also just be a quick set of questions that we can answer for you. Like I said, we primarily deal in the wage and hour space, which does include paid sick leave is under our authority. For the last few years, we've enforced and taken complaints regarding unequal pay based on gender disparities, sex disparities in pay. For a few years now, most of you should be aware about the job transparency provisions we have, especially regarding pay postings and identifying and notifying internal folks at your business that someone has been selected for a specific job. Labor relations, mainly related to public sector organizing and representation elections. We also, under labor relations in the unions, in the wind space and some other spaces as well, we will do, we will investigate unfair or adjudicate unfair labor practice complaints in our labor relations. We also enforce farm work conditions across the state. That's the bulk of what we do. We have a couple bullets here just to mention it. We do get a lot of referrals from other agencies, especially the Colorado Civil Rights Division. Instead of coming to us, they think that we have authority over discrimination and harassment and accommodation. Unfortunately, we don't. But what we will do is we'll always do our best to refer an employer or an employee to the correct agency or resource. Okay, so we are going to go to the next slide. Okay, so this fall we've been really busy either creating new rules or amended rules, which I'll get to in a second. I first want to note that we have posted on our website the 2026 statewide minimum wage. It will be $15.16 an hour. If your business is in, or if you have employees that work in a municipality or jurisdiction that has its own minimum wage, we have those local minimum wages on our website at coloradolaborlaw.gov. I will note that we do have them all posted, but you'll note that there's not one currently for unincorporated Boulder County. If you are doing business there, note that the commissioners in Boulder County are going to vote on a new rate on November 20th, and they will announce it that day if they do actually establish a new minimum wage for their county. So the rules, I'm not going to go through all of them. I'm going to pick and choose a little bit here. Although the biggest changes are to our comps order number 40 from number 39 and our wage protection rules. Most important update I want to make sure folks know is that per House Bill 25101, there is a new or an updated definition of employer, which says that an employer, a liable employer under our wage and hour laws, includes each individual who owns or controls at least 25% of the ownership interest in an employer, unless that minority owner can demonstrate that they do not have authority to control day-to-day operations. So that is a big change. I want you to be aware of that. Up until August 6th of this year, we would have to do an investigation to determine if those with lower amounts of ownership interest are truly an owner and liable for unpaid wages and penalties. This helps to kind of delineate that it's someone with 25% or more in ownership interest that could be liable if they have any sort of day-to-day control. Okay. Some other highlights, as I mentioned, the different sources for minimum wage, overtime, and wage requirements like base pay in some industries have been updated in our pay calc order. In the wage protection rules, there have been some changes. One to reflect something from House Bill 25-1001 is that the claim cap for administrative procedure complaints through the Division of Labor Standards will go up to $13,000 next July, as opposed to the current $7,500. There's also some clarifications related to the rate of pay for paid sick leave, or the Healthy Families and Workplaces Act paid sick leave. And I do encourage those employers who employ minors in Colorado to take a look at a brand new rule set called the Yes Rules. It's related to House Bill 2410-905, which was passed in 2024. We have just set this rule set this fall. All of the rules I'm talking about today will go into effect on January 1st, 2026. It's related to enforcement of the Colorado Youth Employment Opportunity Act. And we encourage employers who employ minors to take a look at that, especially with regard to the definitions of hazardous duties that are prohibited in Colorado for minors. Okay, oops, let's see. And the last thing I will note that if you have any questions about any of our adopted rules, you can go to our DLSS rulemaking webpage, which is, I guess I got a little typo there, but you can go to you can go to that website, that link, and you can look at not only the rules themselves, but the statements and basis and purpose, which are basically our justification for creating and promulgating those rules. Okay. Okay. In terms of our toolbox, we've created and keep updating a lot of resources in the labor standards space. We have on our labor law guidance and education webpage, we have something we call infos that are focused for employers. We have something called knowledges that are similar to infos, but more employee directed. And as of this month, we now have added 3 new short educational videos about Colorado labor laws. I think that makes our library about 9 or 10 now. And we also have other published labor law guidance that includes public notices and reports and other releases that we have. And that all can be found at coloradolaborlaw.gov.
Okay, thank you so much, Eric, and thank you to all of our wonderful panelists. We've already answered several questions via the Q&A function here on Zoom, but we do have some time left so we can get some questions answered live. We'll start with this anonymous question. It's a great conversation starter between UI and family. I'm going to start with David Gallivan in the family division, but the question is, how do you reconcile the employer protected leave when a staff member takes family leave and then moves on to unemployment? So let's start with you, David.
Okay, so anytime I talk about job reinstatement rights under family, which says that an individual who has been on family leave, who's concluding their leave, is entitled to be reinstated to their previous position. Anytime I talk about this, I want to put a giant asterisk up because this is just the Family Act. So what the Family Act says is if somebody concludes their leave, they should be reinstated to their position unless they are unable to return to that position. So if somebody, for whatever reason, can't return to that position because of a medical condition, the Family Act does not require reinstatement. But the reason why there's an asterisk there is because there are a lot of other legal systems that may apply. That individual may have protections still under FMLA. They may have protections under the ADA. There are a host of other acronyms that may apply. And that's going to kick this over to the UI side of the question. It's because once that family leave is concluded, our involvement is done. So If they can't return to their previous position, then yeah, the family reinstatement rights don't apply, but then they become subject to just whatever other employment laws would apply in that situation. And so I'll let Phil Spessart weigh in on the unemployment side of this question.
All right, thank you, David. And we understand the frustration related to had somebody on family leave, they can't return to work, they can't put them back to work, and now they're separated. Why is UI paying them? Quick reminder that both family and unemployment insurance are also employers. So it's not unique to you as an employer. It's not like this hasn't happened within the unemployment insurance program or within the family program on individuals who may have utilized that leave. So what happens is if they are physically unable to return or their health requires them to change their occupation, at that point in time, they've now separated from you. And so since they've separated from you, they are potentially eligible and entitled to benefits under unemployment insurance benefits. So at that point in time, we're going to review the reasons why they're not working for you. It could be considered both a full separation or a partial separation. But again, based on those reasons why they are not working for you is determinative to whether they can receive unemployment insurance benefits. So anytime somebody is unable to return to work for you because they are still physically or mentally unable to work, they are more likely than not going to receive unemployment insurance benefits, consistent with Colorado statute. And or if they have a health condition that requires them to refrain from working for a period of time that exceeds Family Medical Leave Act or requires them to change an occupation, then those are very specific sections in statute that provide for a full award of benefits. It's important to remember and understand while someone is on family, they cannot be on UI. These are two separate programs. You cannot be on both at the same time. And so you have to have that other occurrence that occurs on family where the separation, both either full or partial, has occurred before they would fall over and potentially qualify for unemployment insurance benefits. But it doesn't just hit you as an employer, it hits every employer in the state, including state agencies. I know it's not an answer somebody would want, Jessica, but that is right. The difference is they're working for you and they're off for a health reason. And now they're no longer working for you, so they qualify for a different program.
Thank you, Phil, and thank you, David. We have another question here for David in the family division. Can you provide more information on how employers should handle family payments as it relates to the new federal requirements that they be reported for federal taxability purposes?
No. Oh, wait. Okay.
Thank
So
you.
one of the things that I want to make clear is that this is guidance that came from the IRS. And so we're doing our best to facilitate compliance and to supply information. Every other state that has a paid family medical leave program is doing the same. We are trying to understand it in the same way that employers in the state are. We've been asking for clarification from the IRS, and we're not getting it. It took us over a decade, not us, but the collection of states that have paid family medical leave programs, over a decade to get this guidance from the IRS. So we're doing our best we can to supply you with that information, but ultimately this is a federal regulation. And if the IRS gets mad at you for something, David told me to do it, is generally not an excuse that they accept. So take everything I say with the understanding that the IRS could apply something completely different. So basically where we are right now is the IRS has determined that benefits paid to an individual who is taking leave for their own health condition are third-party sick leave payments. And under pre-existing guidance, that is considered wages. Wages are subject to taxes. As an employer, you withhold income tax, FICA, FUTA, all of those things that the federal government says you have to withhold from wages. Those now have to be withheld from family benefits. We can't withhold those because we're not the employer, we're not paying wages. So it is the employer's obligation to withhold and remit those. And so what we are going to do is give you the information that we have, the amount of benefits that were paid, so that you can calculate what needed to be withheld and you can adjust the withholding on other wages to accommodate that. It is a complicated situation. Look, honestly, I'm in this position. The entire arc of my life is because I didn't want to deal with tax law. So this is the last thing in the world I want to be dealing with too. I understand it's nobody's favorite thing. We're doing the best we can to get you the information that you need to comply, but I would suggest speak to a tax expert, speak to a tax attorney, an accountant, uh, and get guidance from them as well.
Thanks, David. Looks like we've answered all of our questions, but I do want to revisit one topic that we haven't covered on this webinar too intently, but it has come up in the past. Thank you, Lindsay Behringer, for answering these questions. But the question is about S corps and self-employed individuals within the family division, since there is a task required for self-employed individuals coming up. The question is, since my husband, while he's technically self-employed, he has an S corp. Are they not required to do the self-employed task because they do not see it in their tasks? David, can you answer that? If not, Lindsay, can you answer it live? And put you in the hot seat.
Yeah, I'm going to defer to Lindsay on that. She's going to be the expert.
Certainly, not a problem. So there's an important distinction to be made if you are the owner of an S corporation and have registered with family as an employer. The owners of that business are considered to be self-employed and are not required to be reported as employees under that business account. But the owners of the business are able to voluntarily opt into coverage under family. This does require setting up a separate family account as a self-employed individual, and it does have reporting requirements that were mentioned earlier in this webinar, wherein annually those individuals are required to submit a W-2 or a tax transcript. That is to substantiate wages that have been reported previously. Where there is generally some confusion because this is a new sort of setup for employers is the owners of the business get reported under an employer account. They want to opt into family and don't get that separate account set up. So if you do need assistance navigating whether you have opted into coverage, what those requirements are, I do encourage you to give our contact center a call. They're absolutely wonderful people, very skilled, and they'd be happy to walk you through any of those questions and to dive into your account and understand how it is that your account has been established.
Thank you, Lindsay. And David, I'm going to hand it back over to you so you can clarify some tax information for the family division.
Yeah, and I think I misspoke earlier. When we're talking about FICA and FUTA, it's not actually the employee portion. That is something that we will withhold on the benefits that are paid out. But as the employer, there's an obligation for you to pay a portion of FICA and FUTA based on the wages. And that's what's going to really be different here is that the IRS will impute the benefits that we pay as wages to use the employer. And that then does create an obligation for you to pay FICA and FUTA based on those amounts. And so we're going to be supplying you with that information so that you can appropriately calculate the FICA and FUTA obligations that the IRS is imposing. So we will address the withholding from the benefits for the employee portion. It's the employer portion that we'll be supplying you information on. Again, talk to a tax expert, which obviously I am not.
Thanks, David. It looks like we got one new question here, which will likely be handed over to you, David. Will the PFML benefits then be on the employee's W-2 under the third-party sick pay box, or are we still waiting on IRS guidance for that?
I believe that that's where you would report them, but definitely check on the IRS for that. I have not seen official guidance, but I do believe that is where they would be reported.
Thank you, David. Okay, we have gotten through all of our questions, so I'm going to wrap it up here and give you all 5 minutes of your time back. And as I say that, we got one more. For PFML, David, how do you communicate the payments made to the employer?
So we're going to communicate that information via the portal, the My Family Plus employer side in the HR dashboard. And so you'll be receiving those documents as a CSV document. So that will hopefully facilitate being able to upload it into whatever payroll processing system you use, if you use such one. But you'll get those reports from us.
Thanks, David. We have one more question here. It's hard to tell if this is related to family or the UI division because it could work for both. Why are employers receiving emails saying they're missing the quarterly report, but the portal says everything is uploaded?
I'm not sure. Lindsay, is there a known issue within the portal that could be causing this, or any idea on why an employer might be seeing those emails?
I am not aware of an issue, but there may be some timing questions involved, just because each of those wage reports does take time to process. And so those missing report notices may go out in the interim. I do encourage you to call into our contact center so that they can dive into your specific accounts issues. This isn't quite the right forum, but they are absolutely able to help you.
And it may not be us. It may be unemployment insurance as well.
Thank you both. Phil or Megan, do you have the same advice from the unemployment perspective as the best thing to do to call the employer services line so they can figure that out?
Actually, we did have a glitch with this last quarter, and we have a fix that may not be in place for what was just submitted for Q3 on October 31st. So if you are receiving a new notice of missing report, you've logged into the MyUI Employer Plus system, you've validated that you have a wage report uploaded, no action is needed. If you have some concerns about any of the notification, you're welcome to call us as well, as similar to Family's guidance. But please know that we are aware of a prior glitch and we're going to validate if it's happening this quarter, and we are actively working on it.
I think the only other thing to mention, Jessica, is to make sure that if you're looking at a portal and you're looking at family and you've seen your quarterly report there, to say, did this come from family or did this come from UI? Thing to remind employers is you have two different places to go for these reports to submit and payments to report. And we do know from some data that we pulled that there are some entities that are reporting wages and everything over to family, but somehow are not reporting over here to UI. So it may be a good reminder also for employers to make sure that they're still aware. There are, unfortunately, right now today, two different spaces that you need to go to complete tasks for both UI and for family. So again, the question didn't quite lead us to exactly what it could be, but there are three different options.
Thanks, Phil. And that's a good reminder. The two portals that he's mentioning is My Family Plus Employer for the family division and My UI Employer Plus for UI. And if you do email in response to this webinar with any questions, if I could ask that you be specific to which division your questions are related to, that'll help us route your question to the necessary subject matter experts. We are running up on time here, but I think we can squeeze in one more question. And this is an easy one. Will the questions and answer be going to be included with the information you get afterwards? Yes, we will be sending out this Q&A in addition to the slides and the recording later today. So you will get that in your inbox if you registered. Everything will also be published on our website. So you'll be able to self-serve later this afternoon. And with that, I want to thank you all again for joining us. Thank you to our panelists for answering everyone's questions and for being here today. With that, we will see you next quarter. We hope you all have a good holiday season.